Hello, everyone. Welcome to a quick, hopefully short session on the stock market. Um, I don't know if I'm going to do this every day, every day that the market open going forward, but eventually it could be something that can happen every day. But for now, if I have time to do it, I will jump in and do a quick pre-market session just to see and talk about the market. Um, the reason why I jumped in today to do this because after the quick session yesterday, I figure this is the official first video about the stock market. As you can see in the title, I took out Bitcoin and comic books because that's behind me. Okay, we're not talking about that kind of stuff here. Going forward, most likely you see more of these type of live chat. Um, maybe not every day this week because my brother is going to be here today. In fact, I was busy all morning cleaning out the condo to get it ready for him. So I just got back literally 5 minutes ago to make my coffee. But my brother will stay with me for the rest of the week. So one of the purpose I want to run this going forward is that I can share the kind of stuff that my brother and I looked at during the day. And it will be helpful for some people that want to see what we do and try to learn if they want to learn to trade. But that's it. It's easier for me to share the screen. I mean, I have done it in Zoom, but I can still do the same thing on StreamYard, and he can still see the same thing that you see. He texts me back and forth. He's not going to participate in the chat room kind of thing. He uses his phone to text me back and forth whatever he wants, or call me on the phone if needed. But that's my plan going forward, and I want to use this session real quick to talk about a few things, especially what I do. For those that are not familiar with trading, what I do is called swing trading. Okay, there are people that call themselves day trader. Okay, because they day trade. They trade a lot. Day trader are much more active than I am. What I do is more a lot of watch and wait and be patient instead of trade nonstop. And that's day trader. Day trader would trade 10 times, 50 times more than I do because they constantly trading. They get in and out of position all day long. Have I bought and sold something on the same day? Absolutely, but that's a rarity. Okay, it's most of the time it is about being patient, pick the right spot, buy it, wait a few days, sometimes a few weeks with the right exit target and get out. So that's why we call it a swing trade. Okay, it's not trying to catch 5 cents on a day trade like most day traders will take profit on a 10 cents up, 10 cents down kind of thing, and God bless them. I don't have time for that kind of stuff. So try to not miscategorize me and what I do like day traders. Okay, I try to educate people that what I do is categorize as swing trading, because we swing trade. I'm not sure how else to define it. Hello, Paul M. But yesterday, for those that watched yesterday video or participated in the live session, I talk about how TLT, the bond ETF, have a big influence on the Nasdaq and the market overall, but more so the Nasdaq than the S&P 500 or the Dow Industrial. Okay, the Dow Jones. The Nasdaq is more tied to TLT by the hip. Okay, more so than anything else because of the technology stocks. They trade at the higher multiples, higher PE. This is where fundamental play a part in the discussion. Okay, and when bond rate rise, its impact. I try to word things that not too complicated for other people. Fundamental analysts use certain equations, formula to value any business. Okay, that's what they do. They use a complex formula to calculate what a stock is worth, what a company is worth, and a part of that equation is rates. When rates go up, because it is in the denominator of the equation, for those that understand algebra, it reduces the value, okay, because the denominator is bigger, okay, because rate rise the bigger, and once that happen, it reduces the valuation of many high value, high PE, expensive tech stocks. I hope what I explained makes sense, because like I said, I do not want to ever show you that crazy formula, okay? But that's why the Nasdaq is tied to the hip with many um, things that the TLT does, because that formula changed the way the computer value company, and they will sell if they think something is getting too expensive. Okay. Um, the reason why it impact the Nasdaq more than the Dow Jones and the S&P 500, because like I said, the Nasdaq have much more high tech stocks that are super expensive. Okay, people talk about how Tesla is selling at 1,000 PE or whatever. It's all kind of valuation that people want to throw out there. But if you look at the S&P 500 or the Dow, you have boring old company that sell at cheap PE, okay, low PE. So the rise in rate impact them much, much less. All right. So, all right, that's it. That's my final explanation on why TLT impact the NASDAQ more than other indices. Hopefully people can take that and be okay. Now, yesterday, as you see here on the chart, yesterday when I launched the um, the live session, TLT was red, okay? And I said that until or unless TLT stop going down, the NASDAQ will have a problem. And that's what happened, right? And I did mention, for those that pay attention, that if TLT turn green, then the NASDAQ will rebound. And that's what we had, okay? That's what we had. It's not rocket science. One of the things I said a lot to my brother as I taught him how to trade was I constantly use the term correct, Paul M. TLT is basically the ETF for bonds, okay? One of the things that I constantly mention to my brother for months, even today, on a weekly basis, I told him it's like try to understand the market dynamic. It's a push and pull with many things. There are a reaction to another reaction. Okay, this a lot of time that's how hedge fund, computer trading, everything. It's very reactive to certain things. Okay, there are times where everything go up. Okay, that's when cash are being pulled into the market and they are buying everything, all green. Okay, on the day that you see markets up 300, up 2%, all the indices is bright green. That is all in. Days like yesterday until lunchtime was all red because cash was flowing out. There is cash flow is a huge indicator of where the market is going. Okay, as with any market, it's about cash flow. If less money are flowing into the comic market, do you think it's going to go up? If more money are pulled out of the stock market, do you think it's not going to go red? Okay, understand market dynamic. That's what I constantly tell my brother. Okay, it's just like you have to look. Don't ever look at a stock and say, "Oh my God, it's down." Why? One of my biggest dislike for many decades when I hear someone email me, "Nick, why is XYZ down?" And I'm just like, the whole market is down. You think you own something special that it's nonsense. Paul M, I don't know if the market is scared. I don't know. Okay, I try to not understand this. Here's another market dynamic lesson. What is the market comprised of? Just like in the comic market, a buyer and a seller. Okay, so there's always opposing force on how a market react. Okay, um, keep in mind if I appear or come across, um, how should I say it? I talked to a few people about how I plan to do this on YouTube, and they say, "Oh my God, Nick, are you crazy? Um, we know your personality," and I say, "I know, okay, I know. I will try to do this, but keep in mind it's not going to be easy for me because dealing with my brother was not hard. Okay, it's not easy either, but the nice things about my brother, which I appreciate, was he didn't know much of anything, but he didn't mind me browbeating him or being completely nasty to him when he asked something utterly stupid. Uh, so it was easy for me to deal with him one on one because he knew so little, and a lot of what he thought he knew is the utter garbage that you hear on TV or wherever he read his stuff over the past 30, 40 years. So I constantly tell him that he need to unlearn a lot of the stuff that he knew and stop asking stupid questions. So Paul M and everybody else in the chat room, please, if I don't answer your question because I deem it stupid, okay, and I rather not go into any kind of rant at you or anybody else because there is no time for me to explain every little thing. Okay, keep that in mind. There is no way for me to explain every single thing. People ask me about sentiment this, sentiment that. I'm just like, try not to make things so complicated. Okay. The computers program that trade the market have tens and thousands, if not hundreds of thousands lines of code that they look at. My brain can only process enough information. What I'm doing here is showing you how my brain process what I see and act on them. Okay, I don't really care what other people say. I don't really care what the sentiment of the market was. Okay, the chart that you see here in front of you is the TLT chart. Okay, the Fed has been saying for weeks that it planned to raise rate this year multiple times. Okay, you see this. I have three yellow line here. Okay, each one of them pertain to a reference point. Market just opened, and yesterday, what did I say? This is a key reference low because if we hit that back in October, okay, and we held, so it was key yesterday. As I mentioned, if we hit this, we were red yesterday at this time, and I said we need to hold this, and if we turn green, the Nasdaq will go green, and it did. No need to read anything more into it. I don't need to hear or explain why what. Is there a why? I said it already, all right? This is how I talk to my brother. So if you don't like it, if you can't handle it, don't ask the question. Sit back and learn. Um, look, here's a perfect example of why using reference low and reference high is very important. Okay, this is beyond technical analysis. This is swing trading 101 along with technical analysis. So yesterday I mentioned if this fail, the market will crash hard. Okay, because why? The next low point is here. Look at that, way down below. Okay, so if you do the math, that's a long way. Okay, we got easily 5% more down. But take a look at the upper range. See the darker yellow line on top? Look at that. You see where it hit way back here in January of last year. January 27 of last year. It hit that high point. That means that bond crash. Okay, rate crash. Rate was at the all-time low. Okay, because of this. You know, if you go back and look, when would this happen back in this time frame? Is it the variant? Delta variant? Could it be? Or is it one of here? Regardless, when Omicron hit and the market gets scared that, oh my God, the economy is going to slow down again, rate is going to drop, right? Because slow economy, lower rate. Guess what? That's what we have. Okay, TLT spike because rate drop. But where the TLT and rate drop to? It dropped to reference high, way back here. Okay, if you own TLT, if you are long TLT and you did not sell here or around here, what are you doing? What are you doing? Okay, this is the kind of thing that traders live by. They will not. Okay, when I learned to trade, and my master, my teacher, he would be screaming at me like, "What the f are you looking at? Don't you see this? Don't you see this?" It's screaming, "Get the f out!" Okay, so this is not buy and hold and hope. Okay, swing trading is about picking the spot. All right, you hear me talk about this all the time when it comes down to comic books. Entry points matter. One of the worst questions that I hear both in comic books and in the stock market is in comic books, Nick, is Amazing Fantasy 15 a good book to own or a good book to buy? A useless, pointless question. What's the entry point? What price are you getting that book? Okay, it's not about is it a good, just like Apple. Is Apple, Nick, is Apple a good stock? What's the entry point? All right, it's all about entry point. It's not about, oh, it's just one of the most moronic questions I hear all the time, even from seasoned so-called investors. Why would you? I ask because I have long-term horizon. Yeah. How would you like to buy TLT here a year ago and watch yourself suffer all the way through this and losing money? Okay, how long-term do you want? So entry point matters. I talk about this endlessly in so many videos in comic books. Entry point matter. Don't ask me if something is worth buying right now. Where is it? Where was it before? Where is it now? And where can it go? Okay, that's the trader's mentality. Okay, I apply that into my comic flipping for years, if not decade. Okay, it's not that hard. Swing trading is also relying on something that most comic collectors don't have: patience. Okay, patience. Just look at TLT here. You see this sharp decline since Christmas, right here, Christmas, right, the end of the year, December 29th, December 30th. Okay, keep in mind also, when there are small movement in a TLT, it likely won't impact the Nasdaq. Okay, it is the big movement that scare the computers. Okay, the computer is not going to care. See, like right here, this cluster of sideways going, the Nasdaq is fine. When you see this, Nasdaq is fine. Okay, right here, Nasdaq is fine right here. Nasdaq is fine right here. But this, since the end of last year, you see this big drop crashing through all moving average support. That's what caused the 5% plus sell off in the Nasdaq. Okay, so what's TLT doing right now? It's doing okay. Okay, it's lightly green. And what does the Nasdaq do? Okay, so let's take a look at the Nasdaq. QQQ. Okay, let's go to the QQQ. You see the QQQ right here. Look at this. This is a QQQ. It's the Nasdaq 100, the largest 100 company in the Nasdaq. The Amazon, the Apple, the Google, the Facebook. It's all here. Okay. You're not gonna get those stocks doing well if the QQQ are down, because all those companies represent a big part of the QQQ. Okay. But look at yesterday. Look at yesterday. I'm gonna expand this. Okay, take a look at yesterday. You see when it crashed? What happened when it crashed? Where did it crash to? It crashed to a ref low. Okay, you can't see it, but right here. This spot, you can keep in mind, ref low or ref high can be a range. Okay, it's rare that it's just one line. Okay, like one price point. It can be something that is within, 2 or 3 points. Okay, so I drew this line right here because it's coincide with this spot right here where the market struggle. Okay, but what hurt the Nasdaq was this inability to hold the line right here. Hold the line right here. Last week, right here, this spot right here, along with the move. See, you got a ref high. See right here, this is a ref high that used to be resistant right here. And then it break through. And guess what? It bounced off that ref high right here once, twice. Okay, look at that. See how the ref high turned into, it was ref high equal ref resistance. And then once you go past it and blew past it, ref resistant become ref support. Okay, so it bounced 1, 2, third time fail, bang, you go down. Okay, hard, but now it's bouncing. So as a trader, what would you do? Yesterday, buying Amazon right here was the right move. Buying Costco, there's a lot of stock that you buy yesterday when TLT start to turn green. You have done okay, done very well. All right, but right now it's too early. Okay, keep in mind the first 15 minutes of the day to the first half an hour of the day. This is why I'm running a session right now, just like yesterday. Okay, the first 15 minutes of the day, the first 30 minutes of the day often are what Wall Street call dumb money. Okay, this is when amateurs and people that are foolish are either dumping something too scared or FOMOing into something, chasing something too high. Okay, so as a rule, I sit on my hand and not trade at all the first 15 minutes to the first half an hour. I can talk like this and not feel like, oh my God, I'm missing out on some opportunities. Let the market settle down. Let's see what the direction is, and then make a move if there is a move to make. Okay, so swing trading is a lot of chart watching and trying to be patient. Pick your spot. Okay, have a game plan ready. Pick a spot and move. When it's there, strike. When it's hot. Okay, so yesterday one person asked about Costco, and I said Costco was a good spot to buy, and I did. Go back and watch that part of the chat. I said Costco. When the person asked me, Costco was like 510, and I said it's good. Okay, let's expand it and look. See Costco yesterday, it hit down here at the 509, 510, and I said, yeah, go for it. Okay, I did, because what? Why? It was ref resistant, and then it break through, and then it tested. It dipped, it tested, and then it run, and now it's now testing the second time. Okay, I bought small. I bought small. Okay, because like I said, this is the environment in a stock market where you do not want to go big or go home and be all braggadocious nonsense. Okay, this is the time to bet small. I bet small right here. I bought some at 510. I bought some at 513. I'm okay. Okay, so we'll see if it hold. It need to show me. Okay, right now the market is still in the show me mode. That rate is not gonna go much higher. It need to stabilize. The TLT need to stabilize. But if this fail, remember yesterday I said stock go up level to level and go down level to level. So if this fail, then guess what? We get the moving average here. Okay, this is the 100-day moving average down at 497, 498. That's another spot that I might buy the dip or do nothing. Okay, depend. Once again, it's not an automatic, oh, it go down to that level, I'm buying. It's about where or what's going on with the market. Is a fear, is what's going on. Okay, you got to look at how, you got to step back and take a look at how or why the market is going down. Okay, so it's nothing is automatic. Okay, the computer will do what the computer need to do, but what we try to do is anticipate the computer, skate where the puck is. If you think the computer is going to sell, step aside, let this computer sell to a point where it stops selling. Okay, so you got one spot here at 498 ish, and the next spot is right here, 473. Okay, and then the next spot will be 446. All right, so there are levels. So that's why my chart, you look at, different things. And what do you think about IBM today? Garbage of a company, that's what I think. Oh, but I will look. All right, let's do the chart for IBM. See, I chuckle. At first, when I first teach my brother, right, he was like surprised at how things play out the way that I explained, because I told him when a stock dropped, it's never to a random spot. It dropped to a spot where the computer or other traders are looking at that spot as a potential spot that it will stop dropping. Okay, and take a look at where it dropped. Wow, right on that line and stop and bounce. Duh. Okay, so it is never random. Okay, try to understand that. Okay, whatever the market is doing to any specific stock or even the whole market, it is rarely random. What's random is dumb traders or people that just buy and sell willy-nilly and think technical trading or chart are stupid. There's plenty of pros out there that will tell you chart reading is stupid. Whatever. Okay, is it stupid to see it drop right here? And this is a beautiful spot. Let me tell you why. It's not a bad spot to nibble if you want to go long on. I'm not doing it. Okay, I'm not going to touch it, but it's a good spot because let me show you why. You should see it already. Okay, I shouldn't have to say it, but eventually you understand. I'm trying to draw a straight line here, people. There we go. You see where it dropped? You will hear me talk about this very often. Confluence. Okay, confluence is a term I use when multiple key indicators are converging into a same spot. Usually those are powerful resistance or support. Okay, I love to buy into Confluence on a dip lower, and I love to sell into Confluence when it's a resistance above. Take a look at this. You look at this. This yellow line is a nice rev low. Okay, look at this. Key points here. It hit and bounced hard the last time. It's also a gap fill. Look at this. See? Gap. Gap right here. See, when the stock had bad news, it gap. It's also gap right. Is it random that when IBM had bad news on this day, earning day, or whatever news it was, good or bad, I don't care. October 21st, you see this gap? Is it random that the computer and the traders and the hedge fund gap it right at that point to take it all the way down lower? Not random, okay? Not random. So, but look right here. Add drawing. Add drawing. Draw another line. I will turn off after this, okay? This is the last chart I will be talking about because the 15 minutes is up and it's time for me to look at the market and pay more attention to the stuff I want to trade. Okay. You see this takedown? Where did it go? Ref support, ref low. So look at this cluster right here. Okay, so if you were a trader, if I was not following IBM because I don't care for the company, but if I was, heck yes, would I buy right here? Heck yes. Heck effing yes. Okay, heck effing yes. And wow, did it go like textbook, right? It go to the ref low, bounce like a mofo. And right here would be the spot that I would start selling because I don't know if this line right here would act as a resistance, but it did not. So wham, it would go. Okay, so if I was a trader, right, I would start selling here, here, and then there are so many points here that I would sell right here. Okay, because once again, you look for spot where there are a lot of wick as far as the candle, because that means that the market is not accepting a higher price. Okay, so yeah, I would have been screaming get out right here, but now that it come down to this spot right here and bounce, I like it. Okay, would I nibble? We'll see, but yeah, it's a decent looking chart. So let's save this for myself going forward. I have not traded IBM in so long. Let's save IBM. We put it on watch. There we go. We can take a look at Disney real quick before I say bye-bye. Disney, ooh, the ugly chart. Well, right now it's riding the moving average right here. Okay, so we'll see. It's have a tough spot right here that it need to show me, and then it get this spot right here, the gap line. Okay, let's add a line. There we go. You see this right here, up here? That was a support line for a long time. But look, see this right here, this spot right here? That was the ref low that it bounced, okay? And then they keep going, and then the market take down, just like IBM. just like IBM. The takedown take you right below the ref low and wham. Okay, so is there enough? Is that enough illustration to show you how the computer control the market? Okay, the takedown is so common. It's never random that the market on a bad news, the market take the stock to a certain level. No, the computer know where it's gonna take down. Okay, so if you own a stock and you see bad news coming, look at the chart because it will tell you potentially where the takedown is going to be. Okay, and uh, and how much pain you have to go through. Okay, so be careful. Vinny, I don't have the answer for you. Okay, I own Disney. I bought Disney on the takedown. I bought Disney. Let me look where did I buy Disney. Let me see. Before I go, I want to make sure I'm not talking nonsense because I don't want to tell but I bought something I didn't. I gotta sure going forward if I do this, my session will definitely end before 10 o'clock. Okay, because like I said, it's all about ignoring the first 15 to 30 minutes because that's when a lot of nonsense happen in the market and it doesn't really matter. I don't really focus on that. Oh look, my account is green. It's up when the market is down. That's nice. All right. When did I buy Disney? When did I buy Disney? And I buy small. Trust me. Okay. Right now, in the current state of the market, you're not going to see me go out there and buy 100 share of Disney on any trade. No, buy 5 share, 10 share, whatever. This is not the time to be. Oh, I sold Disney at 157.1. All right. So 157.1. Where's Disney? 157.1. Oh, I sold. Yeah. My most recent trade is right there, 157 point around there. Okay, so yes, I bought it on a dip. Why did I buy it? I bought it at 147. Okay, 147.85 was my entry point. So somewhere around here. Okay, somewhere around here, 147. I didn't buy it at 142. That was not quick enough. Okay, that was around when was that? Early December, but I bought it at 147, somewhere around here. And then I got out at 157-ish. When it hit the moving average and I see the sideways stuff, January 3rd was when I said, see ya Disney at 157. Okay, so that's how I trade. Okay, I can never buy at the low, not fast enough. One of the things that my brother and I joke often is we don't have enough eyes. Okay, we know where things are. We even set alert to tell us like where things are so that we can jump into buy. But often we only have 2 eyes and 2 hands. Okay, so it's only so much you can watch and trade. I have traded Disney on and off forever. Okay, so I have some share. I have some share that I bought a long time ago, just like my first stock that I bought, McDonald's, back in 1985. So yeah, I have some sentimental share that I bought and hold on forever. But when it comes down to Disney, would I buy right here? Heck no, not a chance. It need to show me. Okay, right now, this is what trader call chop. Okay, when things are going sideways, it's chopping. Okay, and for most traders, they prefer to get in a position just like I am when when I have a good sense of the direction. Okay, I don't want to go into a stock and see, oh gee, it's going to be chopping sideways for days and weeks. What's the point, right? We like to get in on a bounce, to go long if we can, and enjoy the fruit of our labor. not buying something and watch. Why would you buy this? Look at all this sideways nonsense here. Why? There is not a trader that I know that would like, oh yeah, let's buy Disney here. Look at this nonsense sideways for 3-6 months. Who cares? Who cares? Traders are here to make money, not to watch something go sideways. Utter nonsense. All right, enough for today. Hopefully people can take away some important lessons. If not much I can do. All right, people, I gotta run. Time for me to trade. Bye-bye.